Welcome back to Forex Professional Training in Financial Markets. In this session, we will be discussing a price action. Most financial institutions, banks and professional traders utilize price action method to detect the most appropriate sell or buy entry price in a convenient time. Buy zone. Buy zone is a region in a downtrend where an upturn point is formed and a long or short upward trend is presumed. Sell zone. In an uptrend, sell zone is an area in which a downturn is formed towards the bottom with a long or short-term momentum. Pending zone. Pending zone is a region without any valid buy or sell signals. Thus, traders must wait for an appropriate buy or sell zone to appear after a significant news or event. Traders must consider that proper buy or sell zones are not always available. Thus, a successful deal requires knowledge, experience and patience. Price action strategy. When a market trend moves towards a direction due to high volume and number of agreeing orders, most of the proficient traders close their orders completely or partially on certain spots where market trend would change its direction for a short or long term. For instance, traders have placed sell orders on a downtrend, and after some declines, most of the experts close their sell orders just before a corrective or reverse points. Thus, they could place buy orders on a certain price. A proficient trader always waits for reversal points to place a suitable order with a rational profit based on different trend terms. Applied tools. Implemented tools utilized on price action by traders are as follows: levels, support and resistance lines, patterns, candlesticks, indicators, and strategies such as Andrew's pitchfork. Patterns should be considered thoroughly since they have key effects on a price action strategy. Traders who trade on the basis of fundamental analysis would exploit technical analysis to detect suitable entry or close prices. Obviously, traders who trade based on technical analysis use the above mentioned tools to figure out the most appropriate entry and close price. Timeframes. Traders must set a time frame on a monthly format, which should be changed to a desired time frame step by step. On each time span, a trader must determine significant levels, support and resistance lines, patterns, candles, indicators, and strategies. For instance, if a trader wants to place an order on H1 time frame after changing the time frame to M1, then he or she must decrease the time span step by step towards H1, alongside of utilizing major tools on the desired spot. H4 is the most applicable time frame used by professional traders. Advantages of price action. There are several reasons why traders should use price action. Firstly, most of the traders place an order on the basis of a pattern signal. Sometimes the pattern may be formed partially or generate false and unreliable signals due to invalid spots or unpredicted trends. A trader can foresee the future market trend by analyzing market trend and patterns by utilizing price action. For example, a trader can speculate that the trend will proceed to the TP price generated by a certain pattern or trend, will reverse its direction as it reaches 40% of the path towards the TP price. Secondly, a trader can determine accurate and the correct place of TP price to derive rational and profit. Thirdly, a trader can specify the exact place of SL price. If a trader determines a wide SL, then it might perish all of the capital. If a short SL price is selected, price may reverse its direction towards the desired TP price after it touches SL price, so the order is closed with a loss. SL price can be spotted precisely. Fourthly, A trader can develop the efficiency of applied strategy if the start and end points of a trend can be predicted thoroughly. Fifth, a trader can enhance their risk and money management by implementing price action. Since traders exploit leverage provided by brokers, they would place more orders with a higher risk to gain a higher amount of profit. However, inappropriate place or time of orders causes a great deal of capital loss. Sometimes a trader may speculate that a trend may change towards the TP price when a market price proceeds towards the SL price, but this will result in margin call. And lastly, a trader may consider thoroughly both directions on the trend when he or she wants to place an order after utilizing price action. For example, some traders considered that the price of gold would increase towards 2000 after it had reached the 1300. However, they did not think over a further price decline. Price of gold decreases towards 900, and most of the traders lost their capital. A trader can determine some levels on both sides, that if a market price breaks each one of those levels, then the trader can consider a new order regarding recent movement. Most suitable time. Saturdays and Sundays are the best time to analyze open orders and suitable spots to place new orders. If a trader wants to place an order on a short time frame, or a sharp and abrupt price movement occurs, then a trader must update his or her information before the beginning of London sessions. Widespread symbols. A trader should select the most appropriate and prevalent pairs and commodities like Euro against the US dollar, British pound against the US dollar, gold and oil. A trader must avoid using unpopular symbols in their analysis, such as those symbols that have CHF or TRL. Financial, tax, interest, importing and exporting regulations have a significant effect on a market trend and price. Thus, a fundamental issue has a considerable effect on a market trend, rather than technical subjects, so less important symbols have tiny or no effect on the trend. Suitable platform. FX Pro provides the most convenient platform, which has a fine platform with little price noise and long available history of each symbol. Thus, traders have access to the history of a certain symbol, which is necessary when analyzing on the basis of price action. For instance, the chart of oil symbol on FX Pro MetaTrader 4 platform shows history from 2002. Thus, a trader can analyze market trend in different time frames. It is strongly recommended that a trader has two platforms concurrently, one for analyzing market trend and another one for placing orders. A trader can analyze more rationally when he or she does not get distracted by their open orders. A trader must always watch the market trend and analyze the most recent trends. However, it does not mean that any market fluctuation or price movement he or she could close the order. Most of the time, TP price would be reached after some fluctuations. The importance of price selected to be used on price action analysis has three different levels: low, normal and high. The importance can be specified by different factors. Firstly, the time frame. The importance of analyzed price on M5 and M15 is low, while price in a weekly and monthly time frame has a higher importance on price action analysis. Secondly, the confirmation. There may be multiple agreeing signals generated by some patterns or candles. Thus, that price has a high significance on price action analysis. If there is one confirmation on that price, then the importance level of the price may be normal. Thirdly, overlapping. If a price trend and direction is confirmed by other tools on different time frames, then the importance level of that price would increase. That concludes this session. Until next time and another session, take care.